All right, so we're going deep today into BlackRock's new natural capital strategy. These reports are pretty dense, but it seems like ESG investing is the hot topic right now. And when the world's biggest asset manager makes a move, well, people notice. We're talking potentially trillions of dollars shifting around.
Yeah, and the interesting thing is, this isn't just like a little side project for them. They're really trying to change the game, like how the whole financial world thinks about the role of nature in the economy.
So you're saying it's more than just adding some green investments to their portfolio. They're looking at the whole picture of how companies impact water, soil, biodiversity, the whole enchilada.
Exactly. They're basically saying goodbye to this idea of treating nature like a free-for-all, like this externality.
Right, like it's a free buffet. Load up your plate, no consequences.
Yeah, just take what you want. Clean air, water, fertile soil, without thinking about the damage.
Like calculating the cost of a road trip, but pretending gas is free.
Exactly, and that's what BlackRock is highlighting. Their research shows that. More than half of global GDP, like $58 trillion, depends on healthy ecosystems.
58 trillion, that's more than half, of the entire global economy, all relying on something we've basically treated as free. So what happens when those free resources start running out?
Well, we're already seeing the warning signs. Soil erosion, for example, is costing global agriculture $40 billion a year. And then there's pollinator decline, which is threatening over $500 billion worth of crops. These costs are real. And they're only going to get worse. BlackRock is actually predicting a $12.7 trillion repricing event by 2030.
Okay, hold on, repricing event. That sounds a bit ominous. What does that actually mean?
Think of it like a financial earthquake. Some investments are going to crumble, the ones that rely on exploiting nature, but others could see massive gains, the ones that are aligned with a sustainable, nature-positive future.
So it's a total reshuffling of value. Okay, I'm starting to see why BlackRock is making this move. But is it really just about doing the right thing for the planet? Or are there other forces at play?
There are definitely some powerful economic and political forces in the mix. The reports highlight three main pressures. First, there's this regulatory tsunami hitting businesses all over the world. The EU, for example, has new deforestation bans that have serious implications for companies sourcing materials from those regions.
And I'm guessing it's not just Europe.
Right, it's a global trend. There's a push for stricter environmental regulations everywhere. The reports mention things like the TNFD, the Task Force on Nature-Related Financial Disclosures, and the ISSB, the International Sustainability Standards Board. They're forcing companies to be transparent about their environmental impact, so no more sweeping those externalities under the rug.
Right, they can't hide anymore. Okay, so that's regulatory pressure. What's the second pressure BlackRock is facing?
Well, it's the increasing escalation of physical risks tied to the environment, climate change, land degradation, biodiversity loss. The planet is presenting us with the bill, and it's not cheap.
Yeah, the reports mention that 40% of the world's land is already degraded, and agricultural productivity has dropped by 23% since 2000. Those are some serious red flags.
They are. It's a sign that ignoring the health of our planet is no longer an option. Both ethically and financially, these physical risks are impossible to ignore.
All right, so we've got this regulatory pressure and these escalating physical risks. What's the third force pushing BlackRock in this direction?
This one might surprise you. It's investor demand. BlackRock's own clients, the institutional investors with trillions of dollars, they are demanding action on natural capital.
So it's not just a few activists, it's the big money starting to see the writing on the wall.
Exactly. They're recognizing the financial risks of ignoring nature, but also the huge potential returns from investing in a healthy planet. The report says that 78% of institutional investors now consider natural capital a priority.
78%, that's a huge majority. Okay, so we've got these three forces coming together: regulations, physical risks, investor demand, all pushing BlackRock towards this new strategy. But how are they actually putting it into practice?
That's where things get really interesting, and it seems like 2025 is the turning point. Before that, it was mostly talk and some minor adjustments, but after 2025, they're going all in.
All right, so what does all in look like for the world's biggest asset manager?
First, they're completely overhauling their river models. They're moving beyond just climate to incorporate something called biophysical analytics.
Biophysical analytics. That sounds impressive.
It is. They're mapping out entire ecosystems and how they all connect. So instead of just looking at a company in isolation, they're analyzing how that company impacts the whole system.
So like they're not just looking at a mining company's carbon emissions. They're looking at how that mine affects water resources, biodiversity, and the communities down the stream.
Exactly. They're taking a much more holistic view, which is essential when dealing with something as complex as nature.
Okay, that's risk modeling. What other changes are they making?
Their engagement strategy is also getting a major upgrade. Before, it was a lot of gentle nudging, encouraging companies to disclose their environmental impacts.
And now,
Now they're using the voting power to force change. For example, they voted against 43% of directors at companies exposed to deforestation risks.
wow, that sends a pretty clear message, so they're not messing around. And speaking of money, how is this new strategy impacting their actual investments? Where's the money going?
The reports highlight a pretty big shift in their asset allocation. They're moving away from traditional industries and pouring money into investments aligned with a sustainable future.
So less investment in things like oil and gas.
Potentially, yes, and a lot more focus on areas like precision agriculture, sustainable timber, renewable energy, the circular economy.
So companies that are doing more with less, reducing waste, regenerating natural systems.
That's the idea. They're looking for companies that are not only mitigating their impact, but actually contributing to the health of the planet.
Okay, so we're starting to see the scope of what BlackRock is doing. They're rethinking risk, they're flexing their shareholder muscle, and they're shifting billions, maybe even trillions of dollars towards companies that are getting serious about sustainability. But what does this all mean for the average investor? How is this going to impact our portfolio?
That's the million-dollar question. And the reports offer some interesting insights about how this might play out. Buckle up, it could be a wild ride. For one thing, those high-yield bonds that you might have in water-guzzling industries, those are going to become a lot less attractive as water scarcity becomes a bigger problem.
Yeah, that makes sense. If a company needs something that's becoming scarce, that's going to hit their bottom line.
Right. And on the flip side, we're seeing all these new asset classes emerging as investors try to get ahead of the curve.
Like what? What kind of new investments?
Have you heard of biodiversity derivatives?
Biodiversity derivatives. Sounds like something out of Star Trek.
I know, right? But it's a real thing, and it's attracting billions of dollars. Basically, they allow investors to bet on the future health of ecosystems.
So if a company is restoring a forest, investors in these biodiversity derivatives could profit.
Exactly. And the report suggests this is just the iceberg. We're going to see a whole wave of new financial products popping up.
Okay, this is all very interesting, but it also sounds incredibly complex for the average investor. What's the key takeaway here? What should we be doing to prepare for this shift?
I think the most important thing is to start looking at your portfolio through this lens of natural capital. Are you invested in companies that are ignoring these trends, clinging to old practices, turning a blind eye to their environmental impact? If so, you could be in for a rude awakening. The reports mention potential portfolio drops of 20 to 40% during these repricing events.
20 to 40%, that's a big hit.
It is, but on the bright side, there's also a huge opportunity for investors who are proactive.
By investing in companies that are aligned with a nature-positive future.
Exactly. Look for companies that are reducing their footprint, innovating in areas like the circular economy, contributing to the restoration of natural systems. Those are the companies that are going to thrive.
This has been really insightful. We've learned that BlackRock is going all in on natural capital, driven by regulations, physical risks, and investor demand. And this isn't just greenwashing. It's a fundamental shift in their strategy, with big implications for all investors. But I got to be honest, some of this stuff is so futuristic, it's hard to wrap my head around. They're even talking about the intersection of nature and quantum computing.
It is mind-blown, isn't it? They're looking at things like biocomputing assets, which involves storing data on DNA, and atmospheric water harvesting, pulling water out of thin air.
Wait, storing data on DNA. How do they even evaluate investments in something that sounds like science fiction?
That's what's so interesting about their approach. They're not just throwing money at anything. That sounds cool. They've developed these really sophisticated models that consider not just the financial potential, but also the actual biophysical changes these technologies could bring about.
So they're looking at whether these investments will actually make a difference in the real world. Like, will they increase soil carbon, reduce water usage, restore biodiversity?
Exactly. And they're not just hoping for the best, they're setting very specific measurable targets. For example, they're aiming for a soil carbon sequestration rate of 2.4 tons per hectare per year in their agricultural holdings, and they want to see water withdrawals reduced to below 80% of renewable supply in water-stressed regions.
Those are some ambitious goals, so they're putting their money where their mouth is.
They are, and they're not stopping there. They're also looking at how these innovations might contribute to something called ecosystem services.
Ecosystem services?
Yeah, things like clean air and water, pollination, carbon sequestration, the essential services that nature provides that are vital for human life, but often overlooked in traditional economics.
So they're trying to put a price tag on things that are priceless.
In a way, yes. And that's important because it allows them to compare the return on investment of these nature-based solutions with more traditional investments. And what they're finding is that nature is a pretty good bet.
Which makes sense when you think about it. Our whole existence depends on a healthy planet. But it can't just be BlackRock doing this right. How is the rest of the market responding to this massive shift?
That's the big question. It's still early, but there are signs that BlackRock is making waves.
So are we seeing a stampede of investors rushing to pour money into sustainable options?
Not a stampede yet, but definitely a growing trend. More and more investors are realizing that natural capital is financially material, and they're adjusting their portfolios accordingly.
And that's leading to those new financial instruments we talked about earlier.
Right, and it's also driving innovation in the real economy as companies try to adapt to this new reality.
So companies are realizing that if they want to attract investment, they need to get serious about sustainability.
Exactly, and that's leading to some exciting developments in areas like precision agriculture, the circular economy, renewable energy, bio-based materials.
It sounds like we're witnessing the birth of a whole new economic paradigm.
It is pretty exciting, but there are definitely challenges ahead. The reports highlight some potential hurdles.
Like what?
Well, one of the biggest is just the complexity. We're talking about measuring and managing something as vast and interconnected as nature.
So they need a lot of data and a lot of computing power.
They do, and they've invested heavily in those areas, but it's still a huge undertaking. And then there's the challenge of getting everyone on board. Investors are coming around, but there's still a lot of skepticism in the market.
So BlackRock is going to need to be pretty persuasive to make this happen.
Absolutely. They'll need to use all their leverage to push the market in the right direction.
What about measuring impact? How will they know if their investments are actually making a difference?
That's a really important point. And it's an area where there's still a lot of work to be done. But BlackRock is actively involved in developing new methodologies and metrics for measuring the impact of natural capital investments.
So they're not just relying on traditional financial metrics.
Right. They're creating new ways of measuring value.
This all sounds incredibly ambitious, but also incredibly important. If BlackRock can pull this off, it could revolutionize finance.
I agree. It's a bold vision, and it won't be easy, but the potential rewards are huge, not just for BlackRock and its investors, but for the whole planet.
It's like they're betting the future of finance is tied to the planet.
Yeah, they're basically saying that the most profitable investments are going to be the ones that actually make the planet healthier.
So it's not just about avoiding bad companies. It's about finding the ones that are actually, fixing things.
Right, restoring ecosystems, building a better future.
It's a whole new way of thinking about investing.
Totally shifting from exploitation to, like, investing in nature.
This has been really eye-opening. What about you? What stood out to you the most?
I think the biggest thing for me is just how ambitious BlackRock is being. They're not just dipping their toes in the water here. They're going all in, and they're trying to bring the whole market with them.
Yeah, it's almost dizzying to think about the potential ripple effects. I mean, if the biggest asset manager in the world is betting on natural capital, can anyone really afford to ignore it?
I don't think so. This is a wake-up call for everyone. Sustainability isn't just a nice-to-have anymore. It's a core part of doing business.
So for investors, it's not enough to just look at the numbers. We have to consider the environmental impact, too.
Absolutely. We need to align our portfolios with a sustainable future.
It's a big shift, but there's a huge opportunity here.
For those who are paying attention.
It's a little overwhelming thinking about how to measure and manage something as complex as nature.
Yeah, it's definitely a challenge.
But there's also something hopeful about it.
I agree. It's a bold vision, and we need bold visions right now.
We're at a turning point, and it's great to see someone like BlackRock stepping up to lead the way. This has been a wild ride, full of complex data and mind-blowing ideas.
Definitely.
But I think the main message is clear. The way we value nature is changing, and that's going to have a huge impact on how we invest.
Absolutely. It's not just about protecting nature. It's about realizing that our own well-being depends on it.
So as investors, we have a responsibility to think about the impact we're having.
For sure. It's about aligning our financial goals with our values.
And building a future where both can thrive. Thanks for joining us on this deep dive into BlackRock's natural capital strategy. It's a lot to take in, but hopefully it's given everyone a better understanding of what's happening.
It's been my pleasure. I encourage everyone to keep learning about this. It's complex and it's always changing, but it's incredibly important.
This is just the beginning of the conversation, and we're all part of it, so stay curious, stay informed, and let's build a better future together.